Well, Tesla has made it into the green, at least so far, as we get very close to the close. And I have no news at all that would suggest why it would have been in the red most of the day and now going into the green, because there just isn't much to report that I think is affecting the stock. Now, this item should be affecting the stock, but it's not being reported widely. And so I don't think that's what is affecting the stock. And I don't think that the street will really get how important this is. But let's go over it anyway. This is something I've been talking about for a few weeks now, and I'm pretty excited that this may be what's about to happen. From Electrek, Tesla is preparing to launch its own in-car voice assistant, according to information in the source code of its latest update. For a few years now, Elon Musk has been talking about Tesla having its own voice assistants inside its vehicles. After he launched his AI startup, xAI, Musk suggested Tesla could work with the company to deploy its chat box inside the vehicles. It looks like Tesla is now preparing for the launch of such a voice assistant. Tesla is currently pushing out its 2024.14.3 software update, which includes a lot of official cool new features, but there are also things hidden in the code. Green, a Tesla hacker who often finds unreleased features inside Tesla's code, has revealed that some code in the update points to Tesla doing the voice assistant. This is from his post today on X. Other than release notes, stuff from 2024 14.3 include Amazon Music playback support, the beginnings of what looks like Tesla voice assistant that could be activated by a wake word, whatever that is, also known as car always listening for it. Narrated by Jenny Neutral, voiced by Microsoft. That's what is in the release in the hidden code. All right. So anyway, according to Green Sleuthing, Tesla is also preparing to introduce a native Amazon Music app inside its vehicles. With this new release, Tesla introduced a native Audible app, which is also an Amazon product. There's no word on the timing for the official release of the features in the update source code. All right, let's talk to the general. Well, again, let's just, let's say what I've been saying all along, but just let me remind you, I think the vehicle voice assistant in the car will be a huge selling feature. Every little kid and the little kid and every old man will want to play with a voice assistant. And that's not that, including everybody else, I think will feel the same. It'll be really fun, like it was when Siri first came out, only hopefully it will be tons better than Siri is even today. And all kinds of possibilities. We've talked about those possibilities, both talking to the car about the car itself, as well as talking to the car about things like what is ahead, where we might get a great meal, et cetera, et cetera. You can think of the ideas as sure as well as I can. All right, so let's talk to the general economy. Market Watch says that U.S. construction spending unexpectedly fell in March, likely as a resurgence in mortgage rates weighing on home building, but there's a lot more to the construction numbers than just home building. Wednesday, this was reported yesterday afternoon, construction spending slipped 0.2% after being unchanged in February, but economists had expected to go up 0.3%, so that's a 0.5% difference. And construction spending has increased 9.6 year on year in March, but the month to month was very disappointing. Spending on private construction projects decreased 0.5% in March after rising 0.2% in February. Investments in residential construction dropping 0.7% after increasing 0.7% in the prior month. So that's kind of even Steven for the 2 months. So you could say it's flat over the quarter. Outlays on new family construction projects fell by a single family construction fell by 0.2. So you notice there is the new family construction is not the issue. It's the drop in the overall residential, which must be much worse. Again, we've been talking about this for months now, is that the rental market has been is saturated. There's way too many new rental units on the market right now. So that would make great sense that there will be slowdown in that sector. Now, the 0.2% in single family construction is a bit surprising given the current market. This is from Reuters, weaker U.S. productivity gains. This is the one that I hate. This is not good. I'm very upset, but we'll talk about why and what's going on. U.S. productivity gains in the first quarter may challenge the Federal Reserve's efforts to finish its inflation fight without a painful rise in unemployment, potentially stalling progress on prices absent a further economic slowdown. A jump last year on how much workers produced helped the economy grow fast, keeping the hiring strong while inflation fell. This is what you can do when you've got good productivity. Data for the first 3 months of 2024, however, showed worker productivity rose at a 0.3% annual pace compared to increases of more than 3% in the prior 3 quarters. Unit labor costs as a result jumped 4.7%, the fastest in a year, as businesses spread higher wage and benefit payments across a comparatively small boost in what each person produced. So you know how it works. The more you make, the better. But if you make more, but you're paid even more, then productivity is down. Analysts said the first quarter results don't on their own disrupt what has been a core reason for optimism that the U.S. is headed for a safe landing in which inflation could return to the Fed's 2% target rate without a sort of sharp rise in joblessness that we've been talking about. Productivities are volatile, they noted, and even those reported for the first quarter leave a stronger yearly trend intact, with reason to believe there could be further improvements. I want to go back and just look at this one more time, make sure that I have all this information right. So what we're talking about is the worker productivity at a 0.3% annual pace. All right, so keeps alive the question of how much the Fed can count on this productivity issue. Fed Chair Jerome Powell was sensitive to the issue during a press conference, held that its benchmark interest rate at 5.25 would have to stay in that area because unless productivity starts to help drive down inflation. He said he still believes inflation can be returned to the Fed's target. We've talked about that a couple of times. Supply side improvements included higher productivity and faster immigration, helping to bring inflation down. He says he's not giving up on that. Okay, so this number, I suspect that companies are unable, what's basically happening here, this is what I think anyway, is companies are unable to pass along the needed price increases that higher labor costs are creating. That's where we're really having the problem. And they're also getting some upward pressure on costs, as we'll see in a minute. This means we're not yet seeing any real benefit, measurable AI productivity benefits. It also suggests that companies should be looking at more ways to automate and get rid of some of that labor cost, just like Tesla has just done. Cuts are going to be needed in order to get these productivity going again. In the charts that Cern Basher talked about earlier today, if you haven't seen that video, you want to go back and look at it. He pointed out that the smaller cap companies aren't making any money. And this confirms why. This is so normal and natural. I've seen it over the years with the companies I've consulted with, as well as companies that I've known about, is that they're reluctant to lay people off because they don't know how hard it's going to be to put them back on staff again if things pick up. They're always, okay, next quarter will pick up, so I don't want to I don't want to lay these people off. It's just always been that way. It's really, really hard. Of course, people have empathy and they're concerned about these people, but at the end of the day, you got to take care of the company. It's kind of the put on the air supply on your own face first, and then take care of everybody else. If there's no company because you waited too long to lay off, that doesn't help the people that didn't get laid off in the first place. They're all gone now. So this is extremely bad news for inflation fight. Truflation is now showing that food and home inflation rebounding and back to August 23 levels around 2.3% on food generally overall. Food away from home at 4.56, also similar to last August. Health cost cares now raising again. It's going up 2.5%. That is also a big jump from where it was just a couple of months ago. Clothing and footwear, which had gone almost to zero, is now rebounding up to 1.6%. And education, which has now bottomed out and is headed back up also to the 3.5% level. So these are the categories right now that I'm seeing, from Truflation at least, that look like they're in trouble. We had the initial jobless claims report out this morning at 108,000. The more important stat, that total of 1.77 million Americans collecting jobless benefits during the week that ended April 20th, that's about the same as the previous week. Once again, Trueflation has pointed this out, and I've noticed the number, the 210, 108, 110, 112, this average number, it's been flat for just months and months and months. Seems odd, but I guess it's possible that that's what's really going on. Manufacturing orders in all categories were about as expected and similar to the previous month as they were at their best levels back in November. So manufacturing had gone down. This is now, look, we're getting about 5 different reports here from 5 different agencies and various reporting companies. And overall manufacturing continues to be in the doldrums overall. We're seeing some evidence of maybe a slight uptick in some territories, some parts of the country, but overall manufacturing is still low. And now the problem is, as Kobasi is pointing out in his letter today on X, he says, listen, Starbucks stock just fell 20% after reporting a 6% drop in traffic. DoorDash stock fell 15%, reported $21 million loss. Netflix fell 10% after reporting a weaker outlook for Q3 2024. CVS Pharmacy stock fell 17% after net income fell by 50%. Etsy fell 11%, reporting weak earnings due to the macro economy. eBay stock fell 5% after reporting weaker guidance. We've also just talked about McDonald's and pretty much all of the fast food chains all reporting folks are cutting back on their trips to the fast food stores. So Kobasi goes on to say that prices paid spiked to their highest levels since June 2022 due to rising crude oil, aluminum, steel, and plastics costs. So in the manufacturing sector, we're seeing prices going up, labor prices going up in the services sector. And prices are going up in these fast food stores. Prices are going up at food that you buy at home. The consumer is getting hit from all sides, but so are the small businesses. Now, when I say small and small cap and even mid cap businesses, all not doing very well in this economy. So when everybody talks about how great the economy is, it's pretty much 6 companies, maybe even 5, not counting Apple. And the rest are not doing so great. Input costs are surging. Economic growth is stagnating. And then these are just more things that are suggesting stagflation, says Kobasi. Well, what are the markets saying about all this? Let's take a look at where the markets are right now. We will start, as always, with Tesla. Tesla ended up the day up 11 cents, and in the aftermarket is down 6. We could call that flat for the day. I think you'd agree. Let's take a look. We got the Dow closing up 322 today. So overall, the Dow is pretty happy with things. NASDAQ up 235. That's huge. S&P up 45. Let's look at the percentages. We have got the Dow up 0.85%, the NASDAQ up 1.51%, S&P up 0.91. All that suggests they were very happy with well, it wasn't a hawkish statement by Powell yesterday. I certainly wouldn't call it dovish. I called it like not anything. He didn't really say anything. So Tesla up, as I mentioned, 0.06%. We've got Apple up, all the Magnificent Seven up, NVIDIA up 3.34%, solid day for them. Cathie Woods almost all up. So a very up day today after all of that reporting. Not 100% sure. The economy is doing okay, not great, okay. Some of the economy not doing well at all. The consumers are starting to pull back. Not sure why the stock market is so elated today, but let's go ahead and look at the bonds. We have got the bonds. We have got bonds down 0.8 basis point today. Actually, under 4.6 at 4.583. That's good. We've got the 2 years similarly, well, even more down 5.2 basis points. Let me just see if I can do this in my head real fast here. 4.8. So we're sitting here still at about 30 basis points difference with the 2-year. That is a low number. That's the lowest number. And remember, people talk about as it contracts, as it gets closer, that's evidence of a possible recession coming. US 2-month was also down 2.6 basis points. All right, let's take a look at oil. We got oil here. Second, sorry. We've got oil, pretty much flat for the day, 78.97. We've got Brent at 83.64. That's back to 5.5 point difference. I don't know, keeps on moving back and forth between a 3.5 and a 5.5, almost 6% difference. Natural gas up 5% today at $2 and almost, well, $2, 3.5 cents. And then we got gold up 220 at 2,313. Copper down 0.91 at 4.50. And the dollar, yen is higher after more intervention by the Bank of Japan. The dollar, so the dollar would be lower, of course, against the yen. Bitcoin up 1759, 59,248, still sitting under 60,000. And the pre-market, of course, we won't know about that for a couple of hours because on vacation, I had to change things up a little bit here in terms of when I report. All right, so there you go. That's what's happening today. What's going to happen tomorrow? Tomorrow is Employment Friday. We will hear the employment numbers. The market doesn't seem to be discounting that at all unless they are thinking the employment numbers are going to be good. And what does good mean? Does good mean we stay under 4% on unemployment and shows a couple 100,000 new jobs? I'm not sure what the market thinks is good right now. I know what the Fed thinks. The Fed would like to see that the cost of labor on the reporting tomorrow is under 3% on an annual basis. So that'd be around 2.25%. On a month over month. Anyway, we'll see what those numbers come in tomorrow. It's always exciting as heck. I am now working very hard to make sure that Larry and I are able to report Saturday morning on what Cathie Wood says on Friday night, because I think she's going to have a lot to say about this last month of what's happening in the financial world. Oh, yes. And before I forget, Cern Basher, and I did do a video earlier today. You're going to see that. Card is right here. As usual, he's got such great charts and graphs showing us kind of the stuff I talk about, but in a little more depth and also a little more visually, because sometimes that really helps us to see things. That's not going to happen when I'm doing my program. I just don't have the time to bring a bunch of charts to the story. Sometimes I do when it's relatively easy to get those together. Otherwise, there just isn't time if I'm going to bring you the news fresh when it's breaking at before the bell and after the bell. All right, or after the exchange closes. All right, that's all I got. It's been great talking to you, and we'll see you, more tomorrow.